Okay, should be there now. I don't know if you can see my screen. I'm having a bit of a problem with firing up YouTube, so I'm not quite what's going on. You can see that the market moved to the downside yesterday after we looked for some downside, and it may pop here, but it's looking less and less likely. There's a little trend line there, but if it does pop up here, then I think they'll probably be swallowed up. So we are certainly looking for some further downside in the FTSE 100. The only chance it's really got is if it waits for the Bank of England rate decision. But I think there's probably enough fear out there to drive us lower. It's not looking too hot for the market here. Not looking too good for the market at all. Well, let's see what happens. All the top 20 FTSE 100 stocks are currently lower and sinking. So if if you don't mind a little bit of a roller coaster, then it's worth getting in a short here, because this is likely to really fly. But it's going to be a tough trade. It's going to be a tough trade to get in, but you do want to get into it if you can. Not looking like these levels are going to hold. As I say, the only chance it's got is at midday. But what's more likely to happen there is we're probably likely to break through, and then just tank. It doesn't look like there's a whole bunch of hope out there. So difficult, really. You haven't got a structural place to go short, so it's going to be a difficult short. But you could hold your nose and go for it, because as I say, this market looks incredibly heavy. You probably want to go in as light as you can. You can always add. Remember, you can always add to positions. So you could go in fairly light and see. But if this area gives way down here, then I'd say it's probably good night for the FTSE. Yeah, that's a difficult trade, really. Difficult trade. Definitely want a short, but it's a difficult one to take at these lower levels. And trading breakouts is never a good idea. So if you're not short already, then you might just have to accept that you could be missing a incredibly good run to the downside. Obviously, if you can accept the chance of a possible bounce, it's looking incredibly unlikely. But if you can accept that there could be a bounce, which is what you need to do, really, you're going to have to wait for a bounce and hope that it comes. But it will be hope, because this market is looking so heavy. Sorry, Zayden. Do you know what? I haven't got. I don't know why, but I'm not getting screens. Jeff isn't in today, which is making this very difficult for me. But I just haven't got the ability to get anything visual going on here. I probably won't. Hey, Lewis, how you doing, buddy? I can't do anything about it, mate. I've tried 3 times now to get online, and for some reason I'm just not able to show any visuals. So it might be an incredibly short show. Let me just see if I can do something here. Share that. No, it's not going to work, is it? Yeah, really sorry, mate. I can't do a lot here. All I can tell you is I can tell you some levels, and then we'll probably have to get out, because this is going to be no fun for you guys. We are currently at a point of support, so an awful point to trade short. The shorts are definitely on. It's just where you get in, really. I mean, if you haven't got in at those highs that we discussed yesterday, then this is going to make it very difficult. Pulling back to where the weekly and daily pivots sit is currently around about 60 pips. Incredibly unlikely, I would suggest. We could pull back maybe maybe 30 pip pop to the upside is about all you can aim for, but you can't get in short here. You just can't risk it. So I would say you either wait for that or accept it, and if it doesn't come back up again, then that's what you're going to have to do. But around about 30 pips, which gives you a number of, let me see. Oh, the screen on? Is the screen working now? I'm on YouTube and I can see it's just, you're just getting a loading screen, but I don't know whether you guys have got any visual. If the screen is on, I can, oh, you got visual, have you? What can you see? If you've got visual, then we can discuss this. So this is where we're at. You can see that we are at a level of support down here. Now there is a trend line. Let's see where the most likely technical area that it might come and test. That looks fairly obvious, doesn't it? So that's the first point of call. So if you're not short already, you can try a short here and then a short here. That was the original short yesterday, but obviously it's fallen from there, so there's not a great deal of chance now. As I say, the one hope that we have is that that traders wait for the Bank of England statement, which is possible. You know, people do tend to do that, but with such an awful headline about this coronavirus, I'm not sure whether even the Bank of England's rate statement is going to make too much difference today. So we could be looking for an almighty bash down, especially if. Great. Okay, you can see that. Awesome. Can you see that as well, Zayden? We're on, are we? Cool. I don't know why I'm getting the loading circle of death when I'm looking at YouTube, so I'm not quite sure why it's not telling me that it's visual, but that's absolutely fine. I don't need visuals. I've got my visuals my end. So we are looking, as I say, for a bounce up into this area. Now let me bring that onto a UK 100 chart for you guys. Yeah, actually, it looks pretty good. It looks different. Now, look at how it's different to the futures. You know, this is the cash market. So this is suggesting a 40 pip move to the upside just to test that monthly pivot, which does look like the area that we've managed to test and break below. So that would be a possible short area. Now that's at 74.50. So you could try a short on there. Now, if the market does remain buoyed here, you know, for this early part, this is the real test for the market. You know, when the market opens up, it's either going to tank or it's going to hold. And the question is, when will it hold until? And the answer to that is probably after the Bank of England's rate statement. So let me do this. Let me quickly do this. You guys are there. Right, where are we at? Sorry. It's just not, you know, normally this is a buy zone, isn't it? You know, that's what I would normally play. But I have to say, I'm a little bit nervous about going long because of the picture. So I'd really like just to, you know, I love the long to go short scenario, but considering how heavy stocks are, I just don't like that particular plan today. I'd much prefer to see if we can get some sort of pullback and then wait and see if we can get the short, just a nice clean short in the market. So that is that's the next idea. So the thing is, I am already short, as you know from yesterday. So now for me, it's just seeing if I can add to positions. And this is what I was saying yesterday. It's absolutely fine to go in light, no problem at all. Because if there are, you know, if you still believe that the market has got room to go in your direction, then it's well worth waiting and see if you can sort of like build into the position. Now, I wanted to bring you this. So this is the question really now, is what time is it likely to go? And look, midday. Now it's currently as you guys I'm sure are aware. It's currently 8:09 in London, which means that, that knowing what's going to happen around about the midday period is quite key. So so yeah, so we need to find out what's happening here. Now that does mean that if this area gets tested up here, we can't really trade it, because and this is the evidence of why it wouldn't be a good idea. Now, technically speaking, you could get in here and just hold your breath for a little while. My suspicion is we probably don't get much beyond this level or this level or this level anyway. So you could split your trade into 3 zones, and this being the first zone. But you can see that we're a little bit oversold down here on the hourly, so that could do with a little bit of a pullback. If we use the hourly trend line of momentum, then this also suggests a pullback into this area here, which probably would match to this point here, and then it looks like it could go. And the thing about any of these is this, they do work and then they don't work. So you can't fully rely on an indicator-based strategy, but that's what you'd look for. And then, looking to actually trade when it had settled here. So it means that you're waiting for an hour to close. So effectively at 9 o'clock, is it there? No. Okay, let's check out at 10 o'clock. Is it there? Yes. Then you're starting to look at trade. So that would be an option, is to wait for the indicator setup, which is the RSI setup. That can be done. But my issue is that yesterday we had a Fed statement. So let's bring that up. Hey LT, how you doing, buddy? No Jeff today. Jeff is Jeff's anniversary. We didn't wish him a happy anniversary. It's Jeff's anniversary, so his good wife has booked him into a restaurant, which is starting just before the show. So we don't have Jeff today, just me, myself, and I. So let me show you what happened yesterday. Now, I'm going to also show you how this is going to relate to a currency, rather than just purely the FTSE. I know some of you trade the FTSE with me, but some of you would prefer to trade a currency. So let's bring that up in a second. 7 o'clock, which is 9 o'clock MT4 time. 9 o'clock MT4 time. FOMC statement. They left it on hold. And if we have a look at the press conference, Fed left its policy rate on hold as it sees economy being in a good place. However, the IOER was, well, we don't need to read the rest of that. Sends the Aussie dollar lower, says the Aussie yen lower, says the Kiwi dollar lower, inspiring net long bets. So ultimately, what he said was, listening in, that they will probably be easing back on the repo market, which is the repossession of bonds in April. Which was interesting because I thought after he said that, maybe the market would get a little bit of cheer that we had just a little bit more upside. Well, Jeff's not here, Lewis. He's off. We'll have to wish him a happy anniversary tomorrow. He's off having dinner today with his good wife. So yeah, so I thought maybe that would give market cheer that because they are not drawing back on the repo market just yet, then we might at least hold an area, but that didn't happen. However, the fundamental aspect or the fundamental fact of this is that it happened at 9 o'clock, and I think the press conference, there we go, it would be 9:30. I know it says 7:30 here, but it's 9:30 MT4 time. So just want to show you what the price action was doing around them. Let's bring this up here. So 7:30 MT4 is, sorry, 9:30 MT4 is here. So you can see here, this is at 9:30. Now this is basically in the same zone. It created that head and shoulders pattern, left shoulder here, head here, right shoulder. Now this is just evidence that if you wait for the news, there's still the opportunity. You don't, people kind of panic that that they don't get an opportunity if they trade after the news. But you can, this is traded after the news. Markets start to slide, and the markets give you a lower high, not quite the lower low, but even if you wait just down here, get the lower low, there's a lower high there, and then the market comes down. And I'll show you, as I say, on some of the other markets in a moment. But the key really was that that the market did nothing. It was kind of like it was floating around this area until that speech had been made. And my issue really today is this as a sell zone is great, but what if the same happens? And okay, Mark Carney's nowhere near as powerful as Fed Chair Powell. But what if the same happens and we just float around here until midday and then the market eases down? And that's why I'm not keen to trade a level until that speech has passed. And it might be that the market is gone by that time, but it does make it just a little bit trickier, in my opinion, to trade it. Now I am comfortable because I have my short already in the market. So it gives me some room to breathe. It gives me some room to wait, and maybe you guys don't have that same you're not in that same position, but I would still suggest that that's a good idea. One of the top 20 FTSE 100 stocks has just popped into positive territory. That's Centrica, but the others are all down. Lloyds Bank is down, and let me just go through the list here. The biggest drop right now is BT, which is the telecommunications provider. It could be a China story there. Royal Dutch Shell down 3.85%. BP, another oil company, down 2.5%. International Consolidated Airlines, this is the interesting one, and EasyJet, both next in the list, down. So the airline stocks are getting absolutely hammered. And if you want to go short without going short on an indice, then just go short on a stock, and you can find a lot worse stocks to go short on than an airline group. So International Consolidated Airlines, which is running BA, down 2%. EasyJet almost down 2%. Glencore, which is a kind of commodity, an energy company, trading mining natural energy and natural commodities. Glencore down 1.5%. So some of the big guns, I mean, they are not the biggest players, but they're pretty big. They're one of the top 20. HSBC, one of the huge players in the FTSE, down 1%. Barclays down 1% as well. Vodafone also down 0.75%. Lloyds Bank down around about 1/3 of 1%. So all the big guns pretty much are lower. And so there's some fear in the market. So we don't need much to tell us that we are looking for the short. The only thing we need to do is time it right. But to a degree, this is where you don't need to worry too much about timing. As long as you manage your money correctly. Yeah, the short trade yesterday was good. Well done, LT. Well done. And I hope some of you have got the short trade from yesterday. But if you haven't, there is still an opportunity, because there's the possibility that the Bank of England releases their report, and you still get the chance to go short. You've entered today. Okay. Okay. So if you've entered today, because you're a little late, not a big problem, but because you're a little late, you have to make sure that you can survive some of the fluctuations. Now, the good thing about entering today is the chances of us seeing this level at least at some point during the day is highly likely. Even if it pops up, it's highly likely we pop down, right back down again. But if you've entered today already, then you're going to have to stomach the fact that you might have to wait until midday UK time before this market genuinely moves. It may not, as I say, but it may. And if you are not too far down already, 74.65, 74.65, 74.65 today. I mean, yesterday, 74.65 is up here. Oh, okay. Oh, well done, mate. No, that's a great price. That's a great price. Really good. Really good. Yeah, nothing wrong with that price at all. I wouldn't be too worried about that. Even if it pops up, No, I wouldn't be concerned with that at all. You want to build into this position. You know what? That 50% is going to save you, because you can add to that. You know, if that starts to pop up, you know, finding the structural point does become quite interesting here. Now, this is the other, you know, thing that could happen. Maybe we just end up holding. You know, maybe there is a complete lack of panic. Maybe we end up holding. Now that's the biggest aspect there. That's the trend line. Now let me just bring this up on a clean chart here, just because what we want to see. Let's get rid of that. I just want to bring this up on a longer term time frame. Now we will talk about the other markets in a moment. Okay, let's have a look. So I'm going to bring this on the futures. You know, the futures is not the cleanest. However, because the UK 100 that's provided isn't really the cash. If it was cash, it'd be king. But because it's not the cash and it's kind of a futures cash hybrid, I prefer the futures market to look at. Now, there's obviously this point up here. There's still this gap here, which if there was any kind of suspicion that this market was going to hold, then that gap being filled and closed is going to drive us down. Now, obviously, right now it's certainly not looking like we're going anywhere but lower. But if it holds on, there's another gap here as well, actually. So there's another obvious kind of position there around about 60 pips to the upside. So there's a possibility that that needs to be closed before. We'll look around the other markets here. Look at gold soaring again to the upside on the SARS epidemic. Here we go. The S&P 500 also at a pretty serious level down here of support. The Dow Jones Industrials exactly the same, pretty serious level of support. When we go down here, we can see left shoulder, head, shallow right shoulder. Great signal buy yesterday as well. Closed the gap, gives us the high test bar, and then bang, we're starting to float down. Can it hold on here? Not looking likely, is it? It looks like looked to me like we could be tanking on the Dow as well. This is the picture with the dollar yen, which Jeff is in, and it's not quite break even just yet. I don't know where not sure where his stop was, but he entered at this low here, and that is starting to move to the downside. And let's just have a quick chat about the pound, because I know Jeff likes to put the pound trade on. Pound is going to be a difficult sell, really, isn't it? A difficult thing to trade, because we've got the Bank of England rate decision later on. But if this virus really starts to take effect, but look at the head and shoulders pattern on that, really clean, right on top of the neckline. This breaks down. I'd say this is probably going a bit of a distance too. Shame we can't get the pound trade on, but I don't really get it if I'm completely honest. I know it's 10 pips in one direction or another. Let's see if we can find where the neckline. That looks to me like the head is here. That looks like a little false area there. So checking this on a measured move. Yeah, it looks like that brings us down to 1.2700 for a breakdown. So there's some room to the downside on the pound. As I say, you need to wait for the Bank of England to come out and make its rate decision. If it's left on hold, which I think it's got a good shout of being left on hold, then this may hold. If it's obviously if they lower the interest rates, then it is just a free for all. So it might even be worth putting in a sell stop somewhere under this level. Give yourself some room, but just before that data is released, it might be worth putting in a sell stop and seeing what happens. You don't want to get spiked in, you know, but you do want to get in if it goes. So because it's got such a long way to travel, you could go safely probably under here, maybe under here. Maybe not so much under there actually, but maybe somewhere around about 1.2900 would be fine. Yeah, 1.2900 would be fine. You know, if it's going to get itself down, that's where I see it going. If they do lower interest rates, again, that changes the picture with the FTSE 100. You know, what it will do at that point, in my opinion, is give a better selling opportunity. So another sell price, another point to the downside. That's what I'll be looking at with the FTSE after the potential for the Bank of England to lower interest rates, because that will probably jerk the FTSE up to maybe close the gap. But at that point, I would see us starting to dive to the downside and follow the rest of the markets. Little left shoulder here, possibly a head being formed here. So coming down to this area here, 71.33 on the daily wouldn't be the most crazy thing in the world. I do see this market could actually start to really come down and come down hard. So looking down at this level would be a target. We're looking at potentially 150 odd pips to the downside. So that's what I'm going to try and hold on to. Even if the market pops higher, I'm going to look for further shorts in the market. So that is the position, and that's the idea right now. Oh, mate, it's totally clean. We got no cases of corona over here right now at all, and I say that with some joy, to be quite honest. Last thing anybody wants is to be hit with any kind of illness. I feel for the rest of the countries in the world, but so far we're okay. And this is the one thing about being an island. It's if something comes over here, then it could be hugely problematic because it's got nowhere to leave. But it's a lot harder for it to spread because we haven't just got land. This big land mass with Europe. So there are some cases in Europe, but so far there aren't any cases in the UK. So we're okay right now. And finally, WTI continues to move to the downside as well. Massive move to the downside with WTI. So unless they sort out the supply chain with WTI, then the likelihood is that will continue to move lower. Yeah, you're absolutely right, mate. And I was speaking to Shirlene earlier, and Shirlene was saying that it's worth getting a box of masks because they sell out very, very quickly. But you might be better positioned to tell me, do the masks actually work? Or is it just a case of almost a placebo? It just makes people feel better. I heard it was more to do with hand hygiene than anything else. Right, now I am kind of done it in some respects. The takeaway really for me is that with all these markets where they are, it's really the same with this. This is a daily chart on the dollar yen. Now you can see that all markets right now have this incredible fear, and it's being expressed everywhere. Dollar yen down, gold up, FTSE 100 down, the S&P down, the Dow Jones Industrials down. So all these charts are down, and it's showing us, it's expressing to us the fear that's in the market. However, we are at a buy zone, and this is where opportunities do actually arise to buy the market. I am not going to do that on this occasion. There's a chance that we could pop to the upside, but I'm not going to do that on this occasion because I just want the short, and I just think that the long on this particular occasion is just a little bit too dangerous. So, I mean, the fact that they're all popping up is quite a good sign. But I wouldn't be too keen on the longs here. So I'm just waiting for it to go long so I can go short without trading it up as well. So we do have these areas. Let's just check this on the hourly chart as well. Possible that that this becomes a zone down here. So it's got to break out of here, but if it does pop up, then look for the gap and then look for that. So same situation and same scenario as yesterday. If you're not in, then look for a pop around about 50 pips higher and step in light would be my advice. And step in light around about here, which is currently sitting at 74.04 with the market at 74.64. So sorry, 73.64. So that would be a 40 pip move to the upside. So on the cash 100, you're looking at UK 100, you're looking at 74.70 for the first possible short. After that, the next short is this area of resistance here. Then we have the gap, and then we have the weekly pivot. Now, the reason that I mean, yours will look different to mine. So let me just give you this on. Make sure that this is. Now that is going to look good. That pops up to that area. Look at that. Trend line and weekly pivot would look like a brilliant place to go short. Now that's a long, long way away right now. In actual fact, it's over 150 pips away. So, you know, you've got to be able to stomach quite a lot to get back up to that point. So you might want to put some stops in on the way up. But as I say, short is the direction that I'm aiming for right now. So let's just see what happens. But that's it. So that's what I've got. If there's any questions, then obviously let me know. Yeah, okay, mate. All right. Well, maybe. Oh, it's a placebo, is it? All right. All right. Maybe I won't bother with those. I mean, we haven't got any cases just yet, but as I say, last thing I want to do is get any kind of lung infection. Right. So yes, we have time. I mean, you know, I don't like cutting the show early, but I am done. You know, I don't think there's anything else for me to do here except for wait. And as I said before, waiting until midday would be my preference. So I'm literally going to close the show, turn the charts off, see how my short goes. And if it does, and you know, check back intermittently on the hour. But really, I'm going to be waiting until midday. I want to hear what that Bank of England rate decision is going to be. If it's high enough, then we'll have loads of room to get in to the downside. If they lower interest rates, then the shorts are going to seem a little less palatable. If they keep rates on hold, then the shorts should well be on. So so that's what I'm going to do today. Now that's not to say that that's the right method, because the Bank of England may not have any effect on this market. It might just want to come down. And as I said before, when we look around and across the board, the big guns in the FTSE 100 are all down, bar one, which is Centrica, and that is literally up 0.1%. But there doesn't seem to be too much joy out there for anything else. Airline stocks continue to drift to the downside. Oil and gas stocks continue to drift to the downside. Where is Glencore? Yes, so the commodity and energy stocks continue to drift to the downside as well. So so not a lot to do here. So if you guys have got anything you want to look at, then yeah, Tesla's a fascinating story, isn't it? But just too expensive. I'll tell you one thing, actually, talking to Tesla. The other story that I find quite interesting is Bitcoin. You know, Bitcoin's a fascinating story. Look at Bitcoin. You know, this is up now. Tesla posted earnings, didn't it, overnight? What was that like? I don't know. Look at this though. From the lows, since we've come up from the lows, we are up around about 50%, and that's just the start of the year. You know, that's literally sort of like the end of last year. Just the start of the year, we're already up 50% on one stock, or on one market. Now, when we look at this on the weekly, ever since 2 years ago, we are now up well into 200%. You know, it's just a crazy moving market. Looks like a pretty clean area here as well, which is a bit of a shame when it kind of comes back to this point, doesn't it? Nice inverted head and shoulders. Left shoulder there. There's the head. Right shoulder kind of forms around here, and off she goes. So this is up a crazy amount right now. 3,000 pips. So yeah, I find the cryptos an incredibly interesting story. Do you know what? I don't, and but I'm starting to wonder whether I should, because I've looked at it. The issue is that it moves so much that you'd have to have a pretty wide stop on it, wouldn't you? And make sure that you don't over leverage yourself. I mean, it's a 12 pip spread, but that's not a whole bunch when you consider that it moves. You know, it can move 1,000 1,000 pips in a day. So no, but I am looking at it more and more. I actually have a little meeting with some guys, and one of them is trading. What was the coin he's trading? You have to buy it with Litecoin. I want to say Corona because that's what I got in my head, but it's something like that. I'll look it up. Hold on. He is trading Cardano. That's what he's trading. Cardano. So no, but you know what? The same guys. I think that the same guys made Ethereum. The same guys made Ethereum from what I saw yesterday. So so yeah, another interesting one. And again, you know, this is the little inverted head and shoulders here as well. So didn't really come back much. I'd like to see this drift down before before I did get in. You know, I would probably I'd consider buying some Bitcoin, but I want to see it down from this level. There's support there that broke down, became resistance, down again. So if this is if this came down into this area, then I would trade. I would certainly buy some Bitcoin, but I'd actually like to try and buy them to hold rather than just to trade them. So that area there would be my preference, right there. And if that was to come down and pop up, that's what I'd look for. So so I'm kind of looking for a move down to the downside with Bitcoin. I wouldn't want to trade it low, but if it gets down to around about the 7,500 level, then I'd be really interested in trading Bitcoin. So it's got to creep back. In buying Bitcoin, actually, I wouldn't trade. I'd just probably buy some Bitcoin and see what happens. It's got some room to the upside, and you know, considering the problems that we seem to have in the world, cryptocurrencies seem to be doing pretty well. I haven't found from the others. This is Litecoin. Yeah, Litecoin's up around about the same amount, isn't it? Ethereum is actually Ethereum is interesting, isn't it? It's not quite as attractive when we look at the moves in Ethereum. It looks pretty good though. You know, there might be some cleaner charts on some of these, but Ethereum, Litecoin, all of them are creating an inverted head and shoulders here. So it looks to me across the board, cryptos are the place to be right now. And this is XRP. Now my brother likes this one, and I'm not 100% sure why, but I suppose it's probably got the most room to travel. I think my issue with Bitcoin is because it's first generation. Does it actually have the same functionality as where we are headed now? What we're in third gen now of these cryptos, or maybe even higher than that. But that's my slight issue with Bitcoin. You know, Bitcoin is kind of the old standard. It's not like gold, which gold is gold. You know, it doesn't change. But when it comes down to cryptocurrencies, because they evolve, even though they are finite, they also evolve, and does it mean that they just become obsolete? You know, each of these cryptocurrencies becomes obsolete. So I wonder whether Bitcoin just becomes a proxy. Sorry, not a proxy, a barometer for trading cryptos generally. But actually looking for a different cryptocurrency is the answer. And you know, my friend says Cardano is a decent one, and I think he knows his stuff. So I'd probably look into that one as well. So, is there anything else that anybody wants to look at? You guys want to look at you guys want to look at anything else? Oh, I should probably just draw your attention to this little donate area down here. Now we don't make anything out of this show, as you guys know, but there is a donate button if you guys like what you hear, and you choose. You know, you obviously don't have to donate, but you choose if you think that that the show's been worthwhile, or you're enjoying them. Then there's a little chance to donate down there, which a portion does go to charity. So I should probably just bring your idea down there. Yeah, let's have a look. Let's have a look at euro and the pound as well. Good morning, by the way. Okay, so the pound. So the pound is let's deal with this first, because I'm kind of a lot more comfortable with talking about the pound than anything else when it comes down to currencies, because I know what drives it. We had Brexit ratified finally by the European Union yesterday. No big deal. Everybody knew that was going to happen. We are at this area here. Now, I just did a measured move on this. So to me, this head and shoulders pattern, if it was to break down, gets us down to around about here. You know, if we look at this. Gets us down to around about here, and you know, looking at this level as well, it looks pretty good to me for a target, because there's some looks like there's some support back here on a weekly chart. That looks good, doesn't it? I'd shift it up a little bit. You know, it's a vague idea of the measured move, but that's the target, 1.2740, call it. So if that was to break down, there's some room. Now, I think that there's worth waiting on the release of the Bank of England statement to see whether it's worth trading this, because if they leave interest rates on a hold, then I wouldn't be that keen on trading short the pound, if I'm honest. You know, and if it's to pop up, then obvious points are going to be to this point here. So we are creating, you know, a pattern within a pattern here. There's a left shoulder, there's the head, there's the right shoulder, but we also have this this triangle going on, and it's a bit of a problem, because if it breaks down, now let's do a measured move on the triangle as well and see if that gives us a different area for a target. Yeah, that takes us a little lower. I'd probably want to go with a conservative. I'd want to go with a conservative area on that. Well, there could be a there would be a way to manage that, so you could stay in until that lower line. The picture would have to evolve for us to get down to this point here. Now that's 1.2590 ish. So 1.26, I guess, would be if we round it up to 1.2600, then that would be the next potential for the measurement. So you're looking at two potential levels. Now we're only talking about if it breaks down at the minute. Now, if it broke to the upside, then we'd want to do something similar. Yeah, looks like if it breaks the upside, it gets us back to the highs at 130 for 1.2 sorry, 1.350, 1.3500, something like that. So there are the two potential scenarios for the pound. And it's one of those that you probably should wait for a breakout. If it was to climb from here, this is a buy zone. It's not a sell zone, but it is a buy zone. So if it was to, if Mark Carney decides to leave interest rates on hold, it wouldn't be the worst thing in the world to get in here. If he decided to lower them, it would be the worst thing in the world to get in short here. It'd be awful. You know, it's a pretty bad trade. So my idea would be to either put in a sell stop under these levels, just in case it really starts to tank, or see if you can get some sort of retest. I think it will be a hard thing to happen, but if it can come down and pop up, then you can start looking down. That's obviously always the ideal scenario, but does it happen? Now, the problem with the pound, if they leave interest rates, sorry, if they lower interest rates, is this this virus, because the dollar is the other safe haven, if you like, in the world. You know, we've got obviously the yen, but the dollar's the other one, and with the yen being the one safe haven, after they've kind of like used the yen, and they're going to use the dollar, which is going to put weakness in the market for things like the pound. So it's kind of double barreled if they lower interest rates. And that's why a sell stop might be a better answer. You know, going under this point here might be a better answer, because at least then you are in from the lowering of the interest rates, and you've got a developing story to take us down to this point, and possibly down to this point as well. So that would be my take on the pound. Now, if they leave interest rates on hold, then it would be okay to buy it here, and then see if you get the breakout. You know, at that point, you'd want to take profit at this point, because there's a chance it could still fail and come down because of the developing story with the virus. But at least if they left the rates on hold, to get in here wouldn't be the worst thing in the world. But I'd only be looking for this point here before I'd be a little bit suspicious of whether it could go any further. And that's what 1.312, I'd say. So that would be my take on the pound. And the bottom line is that you'd want to wait until midday UK time, and as I say, right now it's 8:45. So you're looking at this, 8:45. So you're looking at 3 hours. So 8 o'clock Singapore time. That's when I'd want to wait for, really. Euro. As for the euro, euro's in a buy zone. So, you know, to be fair, difficult to make a case technically for a short. So you'd have to look for the long in the euro. Let's just bring this in on short-term time frames. So the same thing. Yeah, look, it's above that that pivot now. Looks like an inverted head and shoulders is being created down here. So it's difficult to make the case for anything but a long in the euro when we look at the technicals here. It could do with breaking through this level now. It's not the right time to buy at this particular point. But if that breaks above 1.1020, then I'd be looking for the retest, which is much more likely to happen than the pound. The pound retesting is has a lesser chance. But when it comes down to the euro would have a pretty good chance of retesting the area. So I'd want to wait for this. You know, if that breaks through, I'd go long. As for the short, I wouldn't be interested down here. Looks like a little channel there. So let's do a little measured move there too. Yeah, that takes us right to the weekly pivot. So there's the target as well, which would suggest to me looking for shorts in that area would be a much better sell, you know, much better prospect. And it looks okay. It looks like a little bit of a sell zone, doesn't it? It looks like it could pop up a little bit further, but somewhere around here would be where I'd be looking to sell the euro, and where I'd be looking to be a bit more comfortable with the euro. Let me just bring that onto a clean chart for you instead. So we are currently looking at a little channel here. There's our channel with the euro. So it's got to take that area out before we're looking for longs. It's just in this little range here, so not worth trading at this current time. And then you are looking for a pop to the upside somewhere along that area with a target around about 1.105, somewhere around about there. But it could be anywhere in the area of here, or I'd leave myself right up until that point there. So between 1.105 and 1.108 would be where I'll be looking for the shorts again in the euro. Let me just do this quick trend line here, see what that's suggesting. Yeah, you see, now that's starting to look like a better line, isn't it? You're the trend line retest as well. So that's what I'd plump for personally if I was going for a long. Yes, you're likely to retrace again. And what could happen is that that the euro might pop up without giving a decent opportunity. It's it doesn't look likely right now, but it could pop up to that point around about the 1.5 and then pop down, given the opportunity to go long into this area. So it might be a really good bar long first. It's definitely a waiting game with the euro. I wouldn't be wanting to trade that right now. I'd want to see that unfold and break out. Now the other thing with the euro, of course, when you look at this chart, And then this is the thing, you know, any pattern can go long or short, but when you look at that chart there, that's a bear flag. And if that is to break to the downside, you know, I could see why people, and this is why I wouldn't trade it long here, because people will be trading it short inside the bear flag, you know, because if this is to come down, and SARS does continue, that brings us right down to these lows down here. So going short now, in retrospect, here wouldn't be the worst thing in the world. Let's just bring up some indicators and see how oversold it is. Let's see how oversold we are. It's got a little bit of room, isn't it? You know, the indicators suggest the indicators suggest a pop up. Certainly on the daily. Let me just check the weekly. Yeah, see, the weekly's got some room to travel. When I kind of look at this this momentum, the trend line on the momentum here, that's got a little bit of room to travel, and actually the daily isn't quite oversold, you know, so it could still drift down there before then looking for the long. So it's a bit questionable, but as I say, you know, if I was having to trade today, well, in fact, not today, if I was having to trade at this particular moment in time, then I would be looking for short opportunities on the short term with the euro, just because it's on resistance and it looks like a bear flag. Not really a clean inverted head and shoulders, so there's not really clean accumulation going on down here just yet. What's driving it is the other question, isn't it? You know, they left interest rates on hold, so the picture hasn't really changed. They said that the repo market would be something that they would consider rolling back on in April. So that could strengthen the dollar somewhat, but it's difficult to know. So that's where we're at, guys. Any other questions? I'm happy to go through them as well. I've got a little while longer. FTSE 100 is putting in something of a reversal bar. I'm just going to check check under the hood and see where we're at. It looks like it wants to get up there. This is no bad thing, you know. It just means that we get a better price on the short side, and I'm still looking at the short. But as I said earlier, 12 midday might be what we're having to sit through here. What was I going to do? Oh yeah, I'm just going to check the barometers here. Yeah, actually, a couple of the stocks have just turned into positive territory. So we got Taylor Wimpey, which is a building stock in the UK on the FTSE 100, has turned positive. Just checking that on the daily. Yeah, it's a little bit overcooked, so I'm not sure where you know, how much further that's got to run. So they turn positive. Also, Tesco, which is a supermarket chain, have turned into positive territory. Nothing really stand out. You got Taylor Wimpey up around about 0.5%, Tesco up about 0.5%. Lloyd's Banking Group, interesting one. They are up around about 0.1%. Now, the reason they're interesting is that they will be heavily have a heavy relationship with the price of the pound. So more so than any of the other banking stocks, the likes of Barclays and HSBC, much more internationally based. So when you look at Lloyd's Bank, Lloyd's is a little bit more internal. You know, it's much more susceptible to the internal movements in the market and in the pound. So they are slightly higher, which is interesting because it's suggesting that the pound is unlikely at this stage to go anywhere. So we will wait and see what happens at midday on that one. And ITV, another stock, which is a media-based company, and Centrica also just slightly positive. So a few of them have just popped into positive territory, but still bad for the big guns, the likes of Royal Dutch Shell, still in terrible shape, BP in terrible shape, International Consolidated Airlines in terrible shape, and that has to be the trade of the month. The airline stocks. As soon as that data came out, then the short was well and truly on with those. And I can see from the highs, they're down around about 15%, which is a huge loss for any stock in a short period of time. And that doesn't look like a story which is likely to turn around at this stage. However, if it does turn around, airline stocks are going to look like a pretty good buy. So I would start maybe just dusting down your shopping trolleys just to see, you know, if the coronavirus story does change, then it's got to be airline stocks that you look for. I'd say that those have to be pretty good value down at the low. Yeah, thanks, Lewis. Have a great weekend too, buddy. And I will speak to you next Monday, same trade time, same trade channel. And it's probably going to be it for me anyway, guys. If you've got any other questions, then I will deal with them. But anything else that you guys are trading or want to look at, then I am quite happy to go through. I don't have anything else myself. I hope everything that I'm looking for is clear. And if it isn't, then just let me know and I'll quickly go through it again. Otherwise, I will push off and, as I say, wait out for 8 o'clock Sing time, midday UK time, and 2 o'clock MT4 time for the likely movements in the pound and the FTSE. Aside from that, I will borrow one of Jeff's phrases and say bye-bye for now.